Are you looking to diversify your retirement portfolio beyond the usual stocks and bonds? Imagine if your retirement savings could benefit from the real estate market's potential for high returns. Investing in real estate with your IRA. Many of you might know IRAs, or individual retirement accounts, as tools primarily used for stocks and bonds. However, there's a hidden strategy that can leverage these accounts for investing in real estate, opening up new avenues for asset diversification and potentially enhancing your retirement savings. This approach isn't just promising. It offers substantial tax benefits and could significantly bolster your portfolio. But remember, while the prospects are enticing, it's crucial to navigate this path with advice from a financial advisor to align with legal and tax regulations. Stick around as we break down how to use your IRA for real estate investments, outline the benefits, and discuss the risks involved. Let's get started on unlocking your IRA's potential in the real estate market. Understanding IRAs and real estate investments. Individual retirement accounts, IRAs, are tax-advantaged investment tools designed to encourage individuals to save for retirement. Primarily, there are two types of IRAs: traditional and Roth. With a traditional IRA, your contributions are often tax-deductible and the investments grow tax-deferred until you withdraw the funds in retirement, at which point they are taxed as ordinary income. On the other hand, Roth IRAs are funded with after-tax dollars, meaning contributions are not tax-deductible, but withdrawals during retirement are tax-free, including the earnings. Typically, IRAs have been used to invest in stocks, bonds, mutual funds, and ETFs. However, IRAs can also be used to invest in real estate, a less common but potentially rewarding strategy. To do this, one must use a self-directed IRA, which allows for a broader range of investment options, including real estate. This type of IRA puts you in the driver's seat, giving you the flexibility to choose exactly what you invest in. Investing in real estate through an IRA can be advantageous. Real estate as an asset class can provide substantial benefits to your investment portfolio. Firstly, it offers the potential for capital appreciation as property values increase over time. Secondly, if your IRA owns rental properties, it can generate consistent rental income, which is funneled back into the IRA, growing your retirement savings in a tax-advantaged environment. Additionally, real estate can serve as a hedge against inflation since property values and rents typically increase with inflation. Furthermore, real estate investments can diversify your retirement portfolio, reducing its vulnerability to the volatility of the stock market. By including physical assets like real estate, you can create a more balanced investment approach, potentially reducing risk and smoothing out returns over time. While IRAs are traditionally associated with more conventional investments, using them to delve into real estate opens up a new dimension of potential growth and diversification, making them a powerful vehicle for building wealth for retirement. How to use your IRA for real estate investing. Investing in real estate through an individual retirement account, IRA, requires careful navigation of IRS rules and understanding the structure of a self-directed IRA. Unlike typical IRAs managed by custodians limiting investments to stocks, bonds, and mutual funds, a self-directed IRA permits a broader spectrum of investments, including real estate. Here's a guide to using your IRA for real estate investments. Understanding self-directed IRAs. A self-directed IRA is an IRA where the investor takes on the responsibility of choosing and managing investments. You must open a self-directed IRA through a qualified custodian who specializes in these types of accounts. This custodian holds the IRA assets, files necessary documents with the IRS, and ensures that your investments comply with IRS regulations. Setting up a self-directed IRA. To set up a self-directed IRA, you'll first need to choose a reputable custodian experienced in real estate investments. You will then transfer funds from an existing IRA or rollover funds from a qualified retirement plan, like a 401k. It's essential to ensure that the rollover complies with IRS rollover rules to avoid taxes and penalties. Legal considerations and IRS rules. The IRS prohibits IRA investments in collectibles and life insurance, but allows real estate investments under specific conditions. Key rules. No self-dealing. You cannot use the property for personal use at any time. Prohibited transactions. You cannot buy from or sell to family members, known as disqualified persons. Indirect benefits. The property must solely benefit the retirement account, not the IRA holder personally. Types of real estate investments. With a self-directed IRA, you can invest in various types of real estate, such as residential properties. These can be rented out to generate rental income for the IRA. Commercial real estate, office buildings or retail spaces which can also produce rental income. Raw land, potential for appreciation in value over time. Real estate notes and tax lien certificates. These offer alternative ways to invest in real estate without holding physical property. Investing IRA funds in real estate can significantly enhance your retirement portfolio by providing asset diversification, potential tax-deferred or tax-free growth, and a steady income stream. However, it is crucial to comply with all legal requirements and work closely with your custodian to ensure your investments are permissible and well-managed. This careful approach will help maximize your IRA's potential while safeguarding your retirement assets. Benefits of real estate investing through an IRA. Investing in real estate through an individual retirement account, IRA, offers several unique advantages that can enhance the growth and security of your retirement savings. Here's a closer look at these benefits. Tax advantages. One of the most significant benefits of using an IRA to invest in real estate is the tax advantage it offers. With a traditional IRA, investments grow tax-deferred, meaning you won't pay any taxes on the earnings from rental income or capital gains until you withdraw the funds during retirement. By then, your tax rate may be lower than during your working years. On the other hand, a Roth IRA provides tax-free growth as well as tax-free withdrawals in retirement, provided certain conditions are met. This can be especially beneficial for real estate investments, which might appreciate significantly over the years. Leveraging options. Real estate investments through an IRA can be leveraged, which means using borrowed money to increase the potential return of an investment. For instance, your IRA can take a mortgage to purchase a property. However, it's important to note that the loan must be non-recourse, meaning the lender can only seize the collateral, the property, and cannot pursue the IRA for any deficiency if the investment goes south. This leveraging can significantly enhance the buying power of your IRA and increase potential returns. Rental income. Owning rental property within an IRA can generate steady, tax-advantaged income. All rental income flows directly into the IRA, where it grows tax-deferred or tax-free, depending on the type of IRA. This creates a compound effect on the growth of your retirement funds, as reinvested income can further increase in value over time. Diversification benefits. Real estate can serve as a powerful tool for diversification within your retirement portfolio. Unlike stocks and bonds, real estate markets often move independently of financial markets. Including real estate in your IRA can reduce risk through diversification, as the real estate market is not directly correlated with stock market fluctuations. This can provide a buffer against volatility in other parts of your portfolio, leading to more stable long-term returns. Overall, real estate investing through an IRA can offer substantial financial benefits, including tax advantages, the potential for leveraged purchases, consistent income from rentals, and portfolio diversification. These factors can make it a valuable component of a well-rounded retirement strategy. Challenges and risks of real estate investing through an IRA. While investing in real estate through an IRA offers several advantages, it also comes with unique challenges and risks that investors must carefully consider. Market risks. Real estate markets can be unpredictable, with fluctuations influenced by economic conditions, interest rates, and local market factors. Property values can decrease, and rental income can vary due to vacancies or tenant issues, which could affect the overall performance of the investment. IRA-specific risks and penalties. Investing in real estate through an IRA must adhere strictly to IRS rules to avoid penalties. Key issues include the prohibition of self-dealing, where the IRA owner or close family members cannot use the property for personal purposes. Any violation of these rules could result in the IRA being disqualified, leading to taxes and penalties on the entire value of the account. Liquidity issues. Real estate is inherently less liquid than stocks or bonds. This can be problematic in an IRA context, where funds from sales or distributions might be needed at specific times, such as for required minimum distributions, RMDs, starting at age 72. Selling real estate can be time-consuming and challenging, especially in a down market. Complexity and cost. Managing real estate requires expertise and ongoing involvement, which can be more complex and costly than traditional IRA investments. Expenses related to property management, maintenance, and improvements must be paid out of the IRA, which could reduce the overall return if not managed carefully. Planning and professional advice. Given these complexities and potential penalties, effective planning and the use of professional advice are critical. Investors should work with experienced advisors and custodians who specialize in self-directed IRAs and real estate investments to navigate these challenges successfully. Understanding and mitigating these risks is essential for anyone considering real estate investments within their IRA. Proper management, compliance with regulations, and strategic planning are key to harnessing the benefits of real estate while minimizing potential downsides. Tips and best practices for real estate investing through an IRA. When considering real estate investments within an IRA, follow these best practices to ensure success and compliance. Choose the right property. Focus on locations with potential for appreciation and stable rental markets. Evaluate properties based on potential returns, not personal attachment. Consider properties that require minimal maintenance to minimize ongoing IRA expenses. Ensure compliance. Strictly adhere to all IRS rules, such as prohibiting personal use of the property. Ensure all expenses and revenues go through the IRA to avoid prohibited transactions. Work with professionals. Partner with experienced custodians who specialize in self-directed IRAs and understand real estate investments. Consult with tax advisors and real estate professionals who can provide insights specific to your investment strategy and local market conditions.